Welcome back to Morning Markets. Today we'll have a look at the UK inflation print and what it means for your money. Having a quick look at markets yesterday, we saw positive returns out of the equity market in general. The strength of markets was really seen outside of the US. However, within the US, we did see some support coming through from the big banks as they reported stronger than expected earnings. The broader market really breathing relief after the rollback of a number of tariffs out of the US and pushed out 90 days last week. In terms of the UK inflation print, on a headline basis, so this is the broadest basket which is available, in March UK inflation fell to 2.6%, down from 2.8%. On a month-over-month basis, headline inflation increased by 0.3%, so still running ahead of the target which the Bank of England need to achieve of around 0.2% in order to get them to their 2% target. Some of the areas where you saw a reduction in prices included toys, it included games, transportation. You saw a slightly weaker price increase come through, but you saw an increase in terms of the prices of clothing as people rushed to the stores to buy their new outfits ready for spring. In terms of the core inflation print, which is the one which really matters to the Bank of England, that moderated from 3.5% down to 3.4%. Still 1.4% ahead of the Bank of England's target, so still work to be done there. And on a month-over-month basis, the core reading increased by 0.5%. So again, it's ahead of the 0.2% which the Bank of England need to see. In terms of the inflation basket, the real upward pressure is still coming through from services. Services, we saw the prices there increase by 4.7%. Now that's cooled at the margin, down from 5% in February. And goods still contributing a very small amount to that overall inflation reading of 0.6%. So it's services in the UK which is driving the upward pressure which we're seeing on the inflation rate. But if we couple the fact that inflation is cooling, albeit not at the pace which the Bank of England was hoping for, with the fact that we have seen a slight weakening of the labour market as discussed by Kevin yesterday, 78,000 jobs reduced through the month of March alone. The market does expect that the Bank of England do have scope to lower interest rates in the UK this year around 3 times, so 3 0.25% cuts, taking rates to around 3.75% by the end of the year, with the first of that series expected to maybe come through in May or in the June meeting. One of the challenges to all of this is the fact that pay growth is still increasing at a rate of about 2.8% ahead of inflation, so still quite upward pressure which is coming through in terms of the pay growth and the ability for consumers to get out there and spend, which is a challenge for the Bank of England. So scope for interest rates to be lowered, and as a result we've seen gilt yields which have moderated so far this morning. Thank you for watching. We look forward to bringing you up to date tomorrow here on Morning Markets.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.